Market crashed big due to tariffs being more than expected. President Trump wants to cover the budget deficit with tariffs and dodge cuts while offering tax cuts to middle class and low class Americans. The overall effect is reduction of overall buying power for Americans. If Americans' purchasing power falls, a lot of companies cannot make enough profit. Low profit means low multiple and lower stock price, and for this reason, the markets are selling off. What we do know is that President Trump cannot have these tariffs for long, as it hurts everyone, especially Americans. People in the US are already dealing with higher inflation. So this will be short-lived, and countries around the world will either make a deal by reducing their tariffs, or President Trump will need to lower the tariffs significantly. My guess is that President Trump will keep the tariffs at the baseline of 10% and would remove any percent higher than 10. So what does this mean to an average investor like myself? Well, I see it as a wonderful opportunity to buy into the market. But the question is, what would I buy with the money I have? Since I've not been greedy, I had been booking in profit when a stock goes up too much, too fast. So, for instance, I booked profit multiple times in the past months. I sold 1/3 or 1/4 when SoFi was at $18. Lending Club was at $14. Apple hit $240. When Toast was at $40 and C Limited was at $130. This enabled me to have cash. So the question is, what do I do with my cash? Now, I personally split it into 4 chunks. So let us say, for instance, I have $10,000 of cash. I will split it into 4 chunks of $2,500 each. I would not time the market, as this is extremely difficult. I buy slow on days when the market crashes big. Now, big crashes, in my opinion, is greater than 1.5% to 2% fall in the indices. So with the 4 chunks, I will use to buy the first chunk, low risk, the second, medium risk, the third, high risk stocks, and the 4th chunk, either ETFs or options. Now, before I continue, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. Please do not buy because I'm buying. Please do your own research. So, as I mentioned, the first chunk is for low risk. We'll go into big tech like Amazon, Meta, Microsoft, Google, and Nvidia. I made valuations for 2029 for all of these. The risk for these stocks is low, and the reward is great for these stocks. I expect my money to double by 2027 or 2028. Please note, my valuations are conservative. So if you had followed the channel, my price target for 5 years out hits just in 2 to 3 years. The second chunk is for medium risk, right? So medium risk, it will go to SaaS companies with a price to sales close to 10. So MongoDB has a price to sales of 6 and it's at $152. Now, this is unheard of for a software company of that sort of margins, balance sheet, and value proposition. Growth may suffer in the short term, yes, but it's still in the teens percentage, which is great. Others at such price to sales are Team at $186, Sentinel-1 at $16, Snowflake at $129, Trade Desk at $45, and GitLab at $40. Now, there is also Datadog at $80. There are others, but these stocks that I just mentioned should go to 200 to 300% in the next 5 years, in my opinion. Now, the third chunk is for high-risk fintech companies. It will go to the sector leaders in fintech as it got damaged too much. So I would pick leaders like Upstart, which is a leader in lending software, SoFi, which is a leader in the next generation banking, Affirm, which is a leader in buy now, pay later. I'm essentially expecting 300 to 500% gain in these, but they are high risk in the next 5 years. So the 300, 500% gain in the next 5 years. The fourth chunk is for ETFs. It will go to VOO. Now, alternatively, I would sell covered calls with this money if I already have too much exposure to ETFs already. Now, what do you think about what I mentioned? What are you buying? Let me know your thoughts in the comments. Don't forget to like and subscribe, and thank you so much for watching.